But let's remember, banking, as in most other business, is a relationship business. People will bank with you because you are under. Your client does not care how much you know until they know how much you care. So as a banker, you must be technically sound. You must have risk management skills. You must be able to do a credit assessment. You need be able to do a needs analysis. But your client is not going to listen to those things if there's no relationship.
And in this episode, we dig into a powerful shift taking place across the banking industry. The age of product-driven differentiation is behind us. With commoditized products and digital parity across platforms, today's banks are finding new ground for competitive advantage, not in what they offer, but in how they deliver it. Joining us to give us more insight is Stanton Lesch, who is indeed a senior lecturer at the School of Financial Services at Milpark Education. Stanton has been in higher education since 2015, with previous experiences in the financial services industry, where he gained broader industry exposure to employee benefits management, investment consulting, as well as retail and private banking. Let's get straight to it. Banking for me, Stanton, is a bit of a foreign thing. You know, I mean, we consume banking products all the time. We grew up around the banking industry. But it's really strange that we never really get to ask ourselves the right question, or even are curious enough to want to study the industry. What does the industry actually look like? When we talk about banking, what exactly are we looking at, technically speaking?
Yeah, I'll speak to that shortly, but let's not forget banking is essential service, firstly.
Yeah.
And banking is also the glue that keeps the economy together, because without the banking system, all other industries, doesn't matter what it is, mining, engineering, technical, whatever, it all depends on the banking system. And it's largely because of the payment system. And obviously that there's a lot of trust in the banking system in South Africa, especially because we globally are one of the top banking countries by any stretch of the imagination. If you look at banking regulations, you're looking at the supervisory, you look at the stability, safety and soundness of the system, we are up there with the best. So, but fundamentally, banking is about people. And the topic that we are discussing today is, I know it says beyond products, and we're going to focus on the service and the advisory. And it's by no stretch of the imagination is it a new topic. Banking has moved beyond products about 20 years ago. But the focus on the service and advisory is next level at the moment, especially post-COVID, where we had lockdown. And we had people not being able to move around, physical distancing and social distancing and all those type of things. And the uptake in especially technology, because technology is one of the biggest enablers of service and even the advice part.
What exactly are we looking at when we talk banking?
Okay, when we talk banking, as you mentioned, there's products. Your savings account, check accounts, your home loans, your vehicle financing, your investment accounts, your money market accounts, all those are just the products. So a lot of people can identify with that. And that is what I'm saying is, when we go beyond products, that is, at the moment, it's commoditized, because Nedbank check account, Standard Bank check account, the Absa check account, and Investec check account is still a check account. The basics are the same. Even Capitec, it's exactly the same. Then we also have the service part where you're saying it is a product, but the product is something tangible, something that you can see. Whereas, and even though you don't see the bank account, but you see the bank card.
Sure.
So that is where the tangible comes in. Where service is actually intangible, because it's difficult to duplicate service. Yes, you have service standards. Yes, you have service level agreements, but that's just part of the service. The actual service is that with the time that we're living in today is, customers are much more demanding. Customers demand not only service, but they demand bespoke advice. They want to be seen as an individual. And from a marketing perspective, customers also want to be seen as a segment of one. But in terms of what you're asking is, banking starts obviously with the individual customer.
Sure.
Basically, in simplest terms, give deposits to banks. Banks use their deposits, and they can basically lend out those deposits 9 times. So basically, they're keeping the economy going. They can fund businesses, they can fund education, they can fund industries. And so that's how the economy keeps on growing. It has the multiplier effect. So yes, it started out with 100 Rand, but that 100 Rand can be lent out multiple times because you got a large, it's basically the intermediation service where the bank is the intermediary between savers and lenders. And that's how they keep the economy going.
What does that understanding of what banking is actually mean from an education point of view?
The focus of us is in terms of the skills that we need in the world of work today and going forward. You need to be commercially aware. So you need to know if I do this product or I do this service, because there's a concept of there's a gap in the market, but is there a market in the gap? Because there can be a gap in the market, but are you prepared to pay for it? The same with service, and I know when we chatted, I spoke to you about the wow. And why in banking today you shouldn't focus on the wow for two reasons. One is it's difficult to replicate a wow. Because what was a wow last week, suddenly next week the client is expecting that. That's the first thing. The second thing is, even though they expect that, they don't want to pay for it. But it's still costing you. So that's why you have to move into what we call technical satisfaction. The customer needs A, B, and C. Do the basics brilliantly. Deliver A, B, and C, whether it be product, service, advice, deliver that brilliantly to the customer, and they will be happy. You have to manage customer expectations, because otherwise they will just want more and more and more. And the day you come back to the customer and say, listen, all this more that you want, there's actually a value attached to that.
Sure.
And there needs to be a value exchange. And the value exchange is, providing this, you need to give me something in return. And then the customer says, but for me, that's a nice to have. I'm not prepared to pay it. I love it, I like it, but I don't want to pay for it.
So Stanton, what are the competencies that we ought to focus on in training the kind of banker that is able to provide that service, that is able to find the opportunity in the gap?
A few skills that I would like to focus on.
Yeah.
One is, obviously, I mentioned it, commercial awareness. The second thing is critical thinking. And when you speak about critical thinking, it's a nice word, it's a nice concept. But basically it is, don't just accept what's told to you as a fact. Interrogate it, analyze it. So you need analytical skills. You need, for example, one of the most underrated skills, and though we need it all the time, is communication skills. If you can't communicate with a client and you can't relate to the client in terms of the communication, then there's basically a vacuum. There's going to be a vacuum. And when there's a vacuum, there's an opportunity for another bank or another banker to actually enter that relationship. And I always tell my kids, I know people are speaking about coding a lot and all that. I am not a technophobe. I'm digitally fluid. We call it digitally fluid.
Yeah.
But I love the focus on robotics and coding and all that. But let's remember, banking, as in most other business, is a relationship business. People will bank with you because you are Yanda. Not necessarily you are Yanda working for ABSA.
Sure.
You are Yanda working for... Because they know Yanda cares, Yanda communicates with me. She genuinely wants to solve my problem. And she always delivers.
If we have to put technical knowledge on the scale with relationship competencies, what balance are we looking at, and how do we actually bring both to a balance? Because of course you've got to be technically sound.
No, definitely you have to be technically sound, and there is a trade-off. But the reality is, and I'm going to use a quote, your client does not care how much you know until they know how much you care. So as a banker, you must be technically sound. You must have risk management skills. You must be able to do a credit assessment. You need be able to do a needs analysis. But your client is not going to listen to those things if there's no relationship. So the soft skills, the communication skills, the emotional intelligence, that gets your foot in the door. But businesses are ruthless. They're only going to do business with you if you actually can bring something to the party from a technical aspect. So that's where the trade-off is. So I can't say it's a 50-50. It is actually, that's also unique. It depends on each relationship.
Sure.
Some people want more of a relationship. Some people just want deliver.
Sure.
And then you have to deliver.
How do we standardize this, Stanton, when you look at the financial services sector? In fact, perhaps the right question is, should we standardize service delivery in the industry?
I would say yes and no. The no part, and I'm going to explain myself.
Sure.
The no part is that I think service in its entirety cannot be standardized because it's uniquely who the interactors are, the client and the banker. But I think if we look at it, and this is a thumbs up percentage, I would say about 80% of service is standardized because we've used technology as an enabler. So if you look at your banking app,
Yes.
you can transact, you can open accounts, you can open new investments, you can pay your electricity, you can buy airtime. Banks, to a certain extent, have become mobile virtual networking operators. So you've got these the Capitec Connect, you've got F&B, where they're actually basically helping you on the technologies and on the digital side. So that can be standardized because it's technology. But when we're speaking about advice, and that's what I'm saying, sometimes the service and the advice, when you're speaking advice, you need the additional knowledge.
Sure.
For example, when I was at Sanlam, one of the things that we found out, we did some research, and we found out that our financial planners or financial advisors that were certified financial planners, that's the industry standard for competence, they were more productive than any other advisor. There's a number of reasons. The first is they obviously were qualified. They understood the whole product segment, the whole market. They knew what a financial needs analysis is. They knew how to risk profile a client. They knew they had insights into all the types of products and services that are available. Whereas the other guys, they were not so clued up. So they, for example, only knew a small and like a niche market. For example, the bankers of 20 years ago, they only knew banking. Go to a bank today, most bankers have some kind of financial advisory qualification.
Sure.
Because they now have to go into more detail.
You know, Stanton, that's deeply interesting for me, and I'll tell you two reasons why. I think the first, you've already mentioned the fact that products are commoditized, right?
Correct.
But for me, the second is the fact that there is an unstoppable push for alignment with the evolution of AI, evolution of technology, etc., etc. My bank actually encourages me not to go into the bank where I would typically receive the advice that we are identifying as a differentiator in banking today. And yet you and I are sitting here and we're saying that the active citizen is the person that understands that to be able to offer advice is what differentiates you from the other banker.
Yeah, definitely.
So then how do we solve that? Because both are necessary and both are actually existing at the same time.
Yeah. Let me answer it a few ways. The problem with what you are describing is that some banks see you as a commodity. And because they see you as a commodity, they don't understand that your needs go beyond products.
Wow.
So you first need to see the client. You have to think of the client as lifetime value. So what we did in the past when I was working at ABSA, one of the pull-ins that you had, and I actually one day recruited a client that way, is he said, the only reason I'm coming to you, Stanton, I'm banking at Investec, is because ABSA gave me a student loan. So imagine you can get the student at 18 and you keep the student as a customer of your bank for 50 years. Just think of the income, multiply that income over that lifetime. So banks should look at lifetime value, and they should see clients more than products. Yes, I agree with the app because it's cheaper for them to service you. And remember, a lot of these banks, and F&B was one of them, what made them so successful from an innovation perspective in technologies, they made self-service sexy.
Yes.
So you were so excited, I see on my app, I can do this, I can do that and that. For those same things, you used to go to the branch.
Yes.
So you are costing the bank less, but they're making more money out of you. But they don't have a relationship with you. So somebody else that offers something similar can still convince you to leave. The loyalty, the customer loyalty and the customer retention, therein lies the problem, because you don't have a relationship and you don't know the nuances of who Ayanda is. Yeah.
I'm sitting here and I'm thinking, why should banks develop, or rather, why should banks be focused on keeping you in place, knowing very well that what technology does is trigger in us the need to move from one place to another because we're exploring?
I'll answer it the following way is, you must remember, there's a cost to retention.
Yes.
But that cost is insignificant to the cost of acquisition. Because to get a new client and to onboard a client costs you a lot of money. So let me give you a simple example, and it's maybe a stupid example. The cost to retain this customer is R1. The cost to get a new customer is R10. Yet we are so obsessed with what they call in banking hunting, and hunting is getting the new clients, get more people on our books, get more people on our books. But you're getting more of them on the books. But what are they doing? They are not even bringing the whole relationship. So you're opening a check account. The guy literally just makes a 200 Rand deposit every month, and we say, oh, we've got a new client. But we're not making money out of this client because there's no relationship. And the client is not bringing their whole pie. Remember, you've got a pie in any industry. And if you want to be a successful business, you want to own as much of that pie. So you don't just want to own the vehicle financing pie. You want to own the home loan, the check account, the investment. The guy's with you, he's earning 50,000, but he won the lotto last week and he's got 100 million investment with somebody else. He didn't bring it to you because you saw him as a commodity.
You saw him as a means to an end.
Yeah.
So what should the student that is currently in the system right now focus on? What are we saying to the student that is studying banking? What should their core focus in their learning journey be as a prospective banker?
The hard skills must be there. You must be able to analyze. You must be able to think critically. You must be able to do a needs analysis. You must be able to solution. Those are box ticking. That gets you in the door. That's what I call hygiene factors. That just gets you in the door. But over and above that, then you also need, as I mentioned, the communication skills, the emotional intelligence, so that you can have a relationship with that client. Because I can guarantee, if you have a relationship with somebody or with a client, and you're not on the speed dial, then you don't have a relationship.
Then you do.
If I'm not top of mind, and why I'm saying speed dial are normally the top of mind people. So I'm not expecting as a banker to be on number one, because I'm not your wife, I'm not your partner. But to have me there in the top 5. So even if you come to me with something that I cannot do, within the financial services organization, because remember the line between banks and non-bank financial, that's blurred. Standard Bank owns Liberty. Old Mutual used to own Nedbank, but now they're going to start their own bank soon. So that's the dynamic that we're working with. So, but if you look at some successful banks, and I'm going to use guys like Investing, their wealth and investment management business is a significant business. We're talking about 200 billion plus. You look at now, let's call it a traditional bank that's also started to see the value there and is also focusing on wealth investment. First National Bank, only the last 3 years they've started focusing on that. They've also started training their bankers in the financial planning aspect of financial services, which Milpark also specializes in. And that wealth business over the last 3 to 5 years is over 100 billion. Business that they didn't have before. And most of that business, I think it's 80% plus. Guess what? Not new clients, existing clients.
Exactly. That's exactly where I needed us to get to, Stanton. Let's trace the impact of relationships in that whole chain. Let's go from beginning to end and just trace the impact of relationships there.
So, when a client values a relationship,
yes,
is when you deliver, you deliver on time. And you also care. Once in a while, phone your client and say, Ayanda, Stanton, Absa Bank, how are you doing? What's happening? Is there any new life events? Did you buy a house? Did you do? Because only if you know the life events, that's when you can start solutioning. So suddenly, you're a first-time home buyer, for example. Now I know you need furniture. You might need life cover because if something happens to you, your partner was used to your income. So your partner and the rest of your family won't be able to live in that house if your income is no longer there with your death. But if I know that was one of the things that you did, you bought a house, now I can say, Ayanda, and what we as bankers used to do is, even some of the most successful CEOs, when we went to go see them, we will ask the guy, would you like your wife to be there? Because he can be the CEO, but guess who's the CEO of finances?
Absolutely.
The wife makes the decisions.
Yeah.
Who does the kids go to if they want something? They go to the mother. The mother makes it happen. The father might be earning the income. So, but if I see you as a commodity, I won't know that you have a husband and kids and all those things. I won't know that there are additional things and additional solutions that I can offer you. Because you can have the best products, But how are you going to make those products relevant if you don't know that Ayanda, out of these 10 products, she actually needs 9 of them, but she's got 2 with us at the moment. And she's only got 2 with us because we just wanted a check account. We just wanted it on the books so that we can go out to the market and say we've got 23 million clients. But we don't tell the market that out of that 23 million clients, 2 million are active.
Wow. So what education does, and I think we've had in the series, we've really explored the value of especially, the Milpark education type of model, and how it seeks to engage the learning process, on a lifelong basis. The value of that is that it enables us to be able to make decisions differently, to think differently, to innovate, to pivot, and all of that. Right now, there is a training manager, there's a product manager at a banking institution. They don't know how to pivot because all they've known is to produce products and to read markets and to be technical. How then do we speak to that person? How do they pivot? What is that point at which they are going to be able to align to the demand, which, as we are saying here today, is the development of relationships within the value chain? How do they spot the change, and how do they make that change?
That's where critical thinking comes in, and that's also where I came in earlier. You remember when I said what we try to teach our students is critical thinking.
Sure.
How do you do critical thinking? Question everything. So don't go with the status quo. The status quo is not going to take you to the next level. The status quo is going to keep you behind. Only the paranoid will survive. That's one of the top businesses. Only the paranoid will survive. If you think that your business is going to last longer than 2 years, think again. And that's why you'll see a lot of business, and Milpark is the same. When we look at going forward, we always try to bring new offerings onto the market. Because, and you have to like a lot of the fast moving consumer goods companies, they will say in the next 3 years, 20% of our business must come from products that we didn't have the previous 5 years. Because if you're going to continue milking that cash cow, and you continue focusing 80% of your attention on the cash cow, then the cash cow is the one that makes money for you. What happens if the world changes and that cash cow is no longer relevant? Suddenly your business doesn't have something to fall back on. There's no new development coming in. So now suddenly somebody else is eating your lunch.
Sure.
Why do you think we had traditional banks like Absa, Standard Bank, First National Bank, Nedbank? They were owning 80 to 90% of the market in the late 90s. They still own 80 to 90% of the market. When Capitec came in 2001, everybody said, these guys are crazy, man. They're not going to make it. They're not going to last. They're another Sambo or one of these. What happened today? 23 million clients. 12 million of those are active. We said there's no space for them. But the clients still saw there was a space. Because people thought, what Capitec actually focused on, what was nice is simplicity. Let's keep it simple. What does the customer need? And I think, if I have to make the analogies, I think Capitec mastered technical satisfaction. Not a wow. 20 years ago, when you have a pride at home or wherever, people wouldn't say, I'm a Capitec client.
No.
Today?
We're proud.
It might not be your primary bank, but it's your secondary bank. Because they've added value. And like I said, there must always be a value exchange. Don't underestimate your customer. Your customer is not a dog, because dogs are loyal. Customers will move. If you don't appreciate your client, someone else will.
Let me tell you, this is exactly the reality that we are looking at in banking today. And Stanton Lesch, senior lecturer at the Financial Services, School of Financial Services at Milpark Education, is here to school you and I how to become aware of some of the needs that you and I might have with regards to banking, but more than anything else, how we can adjust the way that we are thinking about banking to include the need for services over products in banking.
Definitely.